In this video, we are going to talk about 11 stocks to buy and hold forever. So before starting this video, please like and subscribe to this channel for our future updates. Number 11. The Procter & Gamble Company. The Procter & Gamble Company is a producer of consumer goods that is headquartered in Cincinnati, Ohio. Analysts believe that the Procter & Gamble firm is one of the finest stocks to invest in for the long term because it is a defensive company that is anticipated to maintain its position throughout periods in which the macroeconomic environment is unpredictable. The stock's beta value is merely 0.39, which indicates that it has a minimal degree of performance volatility. Lauren Lieberman at Barclays raised the price target on the Procter & Gamble Company from $154 to $157 and maintained an overweight rating on the stock in a research note that was distributed to investors on August 2nd. If the company is able to effectively market its defensive nature, the analyst believes that the stock of the Procter & Gamble Company will exceed the performance of the overall market. Number 10. Tesla Incorporated. Elon Musk is the CEO of Tesla Incorporated, which is a vertically integrated electric vehicle firm. Tesla is one of the most well-known names in the electric vehicle industry. According to the analyst's assessment, the company's performance during the third quarter of 2022 was on par with what was anticipated. Although the EV industry is continuing to face challenges related to supply chain and logistics, the demand side is showing very few signs of weakness, as China and other leading countries around the world are in the process of shifting toward electrification. This shift is expected to continue for the foreseeable future. The market researcher recommended buying shares of Tesla Incorporated and set a price objective of $370 per share. According to the China Passenger Car Association, Tesla Incorporated broke a record in September by selling 83,135 electric vehicles in China. This represented a rise of 8% in comparison to the sales that were achieved in August. Analysts believe that Tesla Incorporated presents an optimistic growth story and has a good chance of observing an improvement in per-unit profits due to the advanced manufacturing capabilities it possesses. Because of the strength of the company's activities, it deserves to be considered one of the top stocks to invest in for the long term. Number 9. ExxonMobil Corporation. The ExxonMobil Corporation, which is headquartered in Texas and is a multinational energy corporation, is widely regarded by financial experts as one of the most profitable stocks to keep for the long term. Because ExxonMobil Corporation is concentrating its efforts on initiatives related to biofuels, hydrogen, and carbon capture and storage, the analyst believes that the business will play a key part in the move away from fossil fuels and toward renewable sources of energy. In addition, Meta mentioned that crude oil refining facilities owned by ExxonMobil Corporation may be converted into plants that recycle plastic, chemicals, lubricants, and biofuels. Over the course of the previous year, ExxonMobil Corporation delivered returns that were greater than 60%. It is anticipated that the company will achieve a higher profit margin than was originally anticipated for this year as a result of the cost-cutting measures that are currently being implemented. The ExxonMobil Corporation has a forward dividend yield that is currently sitting at 3.48%. Number 8. Taiwan Semiconductor Manufacturing Company Limited. The Taiwan Semiconductor Manufacturing Company Limited is a leading semiconductor manufacturer that is located in Hsinchu, Taiwan. The company's products have a wide variety of uses in the electronics sector. On September 14th, Rick Hsu of Daiwa raised Taiwan Semiconductor Manufacturing Company Limited from a buy recommendation to an outperform rating. The analyst believes that Taiwan Semiconductor Manufacturing Company Limited will have top-line growth despite the fact that a correction for the entire industry is anticipated. This is due to the fact that the company is continuing to gain market share and more pricing power. The sophisticated technical capabilities that have led to Taiwan Semiconductor Manufacturing Company Limited's dominant market position are the reason why experts believe the company's revenue will be immune to the effects of economic cycles. Apple, which is interested in incorporating smaller chips into its products in the future, is in talks with Taiwan Semiconductor Manufacturing Company Limited about the production of 2nm chips. Because it has such promising chances for future expansion, Taiwan Semiconductor Manufacturing Company Limited is one of the most attractive companies for long-term investment. Number 7. Johnson & Johnson. Johnson & Johnson is a prestigious healthcare corporation that has been operating in the state of New Jersey for more than 135 years. The corporation is responsible for the employment of more than 140,000 people. In a research note that was published on October 5th, Joanne Wunsch of Citi assigned a target price of $198 for Johnson & Johnson shares and maintained a buy rating for the company. An optimistic outlook on the company's device utilization levels and increased pricing for the medical supplies and technology segment was offered by the analyst in advance of Johnson & Johnson's announcement of its financial results for the third quarter. The fact that Johnson & Johnson is included on the list of dividend kings suggests that the company has maintained or increased its dividend payments for the past 50 or more years in a row. In April of this year, the business celebrated its 60th straight year of dividend growth by announcing a 6.6% increase in the quarterly payout. Number 6. J.P. Morgan Chase & Company. It is widely recognized as one of the most influential companies in the international financial services sector. The bank that holds the title of having the most assets in the United States has added 1,200 other banks and financial institutions to its portfolio. On October 4th, in advance of the company's results for the third quarter of 2022, Keith Horowitz at Citi placed shares of J.P. Morgan Chase to a list titled Positive Stock Watch. Buy was the analyst's recommendation for the shares of J.P. Morgan Chase, which was assigned a target price of $135. According to Horowitz projections, J.P. Morgan Chase will have revenue that is higher than the consensus estimate for the period, will alter its guidance for 2022, and will assume a better run rate in the following year. Number 5. Berkshire Hathaway Incorporated. The Omaha, Nebraska-based conglomerate Berkshire Hathaway Incorporated operates a variety of industries, including banking, insurance, and railroad services. Through its investment arm, the business has also acquired a sizable position in some of the biggest corporations in the world. Warren Buffett, who oversees the business, is regarded as a master at using the value investing tenet to identify the finest long-term stocks. Number 4. Alphabet Incorporated. It is a holding corporation with headquarters in Mountain View, California, and it controls Google, YouTube, and a number of other divisions. The analyst expects the company's EPS to be resilient in the present tumultuous macroeconomic climate as Alphabet Incorporated works to control its costs. This is comparable to what the business did in 2009 in response to the 2008 financial crisis. Alphabet Incorporated shares were singled out by Mr. Post as a top value stock in the technology industry. Number 3. Walmart Incorporated. It is a retail company with its headquarters in Bentonville, Arkansas, and it holds the title of being the largest retailer in the entire globe. As of the year 2022, the corporation operates more than 10,500 retail stores and has a workforce of more than 2.2 million people. The stock of Walmart Incorporated received a buy recommendation from Hans Engel of Erste Group, who previously had a hold rating on the stock. According to the opinion of the market researcher, Walmart Incorporated is one of the greatest long-term stocks in the consumer sector since it has low growth in sales but stable growth overall. In addition, Engel forecasts an increase in Walmart Incorporated's operating margin over the course of the following year, in addition to a tendency toward moderate growth over the course of the following years. As Walmart Incorporated makes significant investments to battle Amazon's growing market share, analysts anticipate that the company's top line will reach over $600 billion by the year 2025. Number 2. Amazon.com Incorporated. It is a global e-commerce powerhouse with operations in consumer electronics, cloud services, digital streaming, and a number of other industries. The business has established a significant presence in the lives of U.S. consumers. In preparation for the holiday shopping season, Amazon.com Incorporated plans to hire 150,000 new employees across the U.S. Amazon.com Incorporated was cited by J.P. Morgan as being its top choice by a significant margin despite worries about retail spending and the expansion of cloud services. The financial services company predicts that over the next several years, Amazon.com Incorporated will continue to see the year-over-year revenue growth, margin improvement, and moderation in capital spending. The company's bottom line will benefit from these elements. Due to quicker delivery times and greater stock levels, J.P. Morgan also expects Amazon Prime services to do well in the following quarters. Number 1. Microsoft Corporation. Bill Gates helped build this tech behemoth, which has its headquarters in Washington. Through its many products, the firm has dominated the hardware and software industries. It has consistently transformed itself over the years, and it appears that the firm plans to take advantage of enterprise customers in this decade by providing cloud-based services like Azure and Office 365. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.